Welcome to the Hayhurst Brothers Podcast with your host, Paul Risse.
Well,
Nice, Conor.
you can tell who the new one is. I'll say that. Welcome to the 7th podcast that we've done this year. What would another work for year be, Jake?
Well,
Annual?
yes, it would. Annual is
Seventh
we're doing
annual.
something every year.
The 7th annual podcast with the Hayhurst Brothers, Paul Risse, Jake Hayhurst, and Conor Hayhurst.
Conor Hayhurst, I have one question. You had 6 other more important guests on before you invited me.
That's a good question, but I wouldn't say they're more important. We were just building the audience before we brought you on.
Okay.
You know, because this is a very important podcast. I know we get these questions all the time.
Yeah.
Paul, we're wearing the same color today.
Nice. And also, I was going to tell Conor, if you added up the views that we've had hundreds and hundreds of people watch the part. So you might be getting towards 1,000.
Well, that's good. I wanted a little bit of a primer before.
See, that's what it was about.
Yeah, so Conor helps us with all of our financing, and he's going to be answering questions today, kind of describing his role, maybe even some helpful hints. Jake, do you want to give the weather report?
Yeah, I can do that. So here in Bridgeport, it's 78 degrees and sunny.
It's a pretty
Thanks, Paul.
It's a good weather report. Our podcast is really getting better. And also, we're surprising you with a new background. I don't know if the shot shows it, but there's a gorilla and a bear. And we
I don't
had,
think it shows it, Paul.
oh, it doesn't show it. Then I'll stop explaining. But we had a year-long debate on which would win. So maybe if you watch this on YouTube,
Clearly, it's the bear. The gorilla cannot beat a gorilla.
Let me tell you,
It's
Paul
not-
legitimately thinks that a gorilla could overpower and destroy a Kodiak bear.
We've actually talked to hundreds of people about this, and there's only 2 that says that the gorilla could win.
Paul Risse and Seth Hayhurst are the only people on the planet that think a gorilla could win. But if y'all are watching this, we would like to know what y'all think.
all a gorilla would do is have to lay there and then just wait for the animal to attack it, then reach up, grab its jaws, and pull its head apart.
No chance, Paul.
It's like,
What happens if he slashes him?
He's dead.
You have one. He has one move, and he has to pray that it's gonna actually.
he's going to play dead until so that he just
The
goes.
Kodiak is 3 times the size, Paul.
I'm not arguing size. That's not something we could argue about. Like, I get that.
And it's the most
like,
fierce animal.
If
on the
Mike
planet.
Tyson were to fight Shaq, who would win? I think Mike Tyson would.
That's the dumbest analogy ever. It's like
Like
Tyson is a fighter.
Are we talking about
Shaq is
60-year-old Mike
basketball.
Tyson or 20-year-old?
A 20-year-old. That'd be a good fight. If I don't know if Shaq can fight, but anyways,
I know he can dunk.
yeah.
Right, he can do that. He can get a rebound.
Don't fake the
He
fall.
doesn't shoot free throws very good though.
Hack a Shaq.
Free throws.
All right, so
I'll get that. Yeah, let me ask.
do
this
you want to
one.
ask your brother some questions about his
I do.
role and stuff, so people
I
can
do.
understand his experience?
It's a pretty unique situation we have, and I'm very thankful for my brother because he has been in the mortgage industry 20, easily over 20 years. So it's really nice to have him on our side because there's a lot of ins and outs. There's a lot of situations with credit. There's a lot of situations with people, whether they approve or what they approve for. So it's a really awesome thing to have Conor a part of our team. So I'll run through some of these, Conor, and then actually, why don't you give us a little bit of a background? Tell us a little bit about who you're with and kind of your situation.
Who you be with?
Who I be with? So Capital Home Mortgage is a company we started about 5 years ago. Been in the mortgage industry for over 20. Capital Home Mortgage, capitalhomemortgage.com for a shameless plug.
You can find it right here.
Yeah. Our parent company is Canopy Mortgage out of Salt Lake City, Utah. Essentially, we can do any mortgages you could think of. We have all FHA, VA, USDA, Fannie, Freddie, non-QM, DSCR. I could put a lot of
Reverse.
We could do reverse. Bank statement. Cash isn't actually
Cash isn't mortgage.
It's all cash.
There's an acronym for Credit Applies Standards High.
What was the last one? I think you gotta mumble through that one.
I was making it up as I went.
You could have said housing.
Oh yeah.
Yeah.
Oh.
Credit Apply Standard Housing.
Yeah.
Okay.
But that's not real.
All the other ones were acronyms, but they took cash as a literal.
Yeah.
So,
In conjunction with the Hayhurst Brothers, obviously we're looking at construction loan options a lot of times, or some people may need help getting the credit to where they can qualify. That's the good thing about what I do. I get to help people get sometimes from point A to point B and be able to either buy that house or build that house. And that's kind of fun.
Yeah, he's a wealth of knowledge, which is really great. I mean, and what's nice is Conor has so much information, and our clients, whether they end up going with him or not, he's always willing to talk to them. He's always willing to give them advice, because he just wants to see people in a home of their own, kind of like we've talked about in the past, as opposed to renting. He loves to figure out ways to get people in something that they own.
Yep.
And so he can get pretty creative. So
before we start the questions,
thank you, Paul.
I was going to ask Conor, what is the biggest challenge you see right now in the market with people that come to you, I think, over the last year?
Well, it's been a very challenging market in general. With people that come to me, I would say, as a whole, there's been more credit challenges this past year, as far as a percentage than in past that I've seen. So we've been helping people maybe get some of their debt cleaned up, or get it to where their score is up to a point where they qualify. On the market as a whole, you've got people with 2.5%, 3% mortgages that even if they want to move or go build a new home, it's really hard to give up that 2.5%, 3% mortgage, realizing you're coming into the high 6s, 7s, and you're doubling your interest rate in a lot of cases. And it's I believe, kept a lot of people on the fence from making that move and maybe bettering themselves with a new build or new home, or expanding or downsizing.
And what I've noticed too is not just your credit score. A lot of people are like, oh, I have a great credit score, I'd like to buy a house. Talking with Conor, your debt to income ratio is probably as important, if not more important, to understand how much money you have going out each month, as opposed to just having a good credit score.
Yeah, so the debt to income ratio, good job, Jake.
Thank you.
You've worked on a few.
Thanks, Paul.
Debt to income is essentially how much money that you have coming in that we can use to qualify you with, versus the amount of debt payments that you have going out, including your new house or whatever you're looking to build. So the confusing thing a lot of times that some people have is self-employed versus employed. So self-employed, somebody who owns their own business or is 1099, in many cases, they have the ability to write off more tax deductions, and they take advantage of the tax code to that end. But what that does a lot of times is they don't have the income as much that we can qualify them with to be able to afford the home sometimes that they want to afford. So in those cases, we have some non-QM products. We can go off of your bank statements and how much cash flow you have coming in on a monthly basis, things like that. Okay.
That leads into the perfect first question. It's from Delane Luis. She's helped us with getting a couple into her house, and she's a really good real estate agent. And what's her question?
Her question is minimum credit score with a construction loan.
Delane Luis. Okay. Minimum credit score is typically going to be 640 on a construction loan. There may be some other products and other banks out there that have variations on that, but what I have access to in the bulk of what I've seen is going to be 640.
Are there things that change that? Let's say someone comes to you, let's say, I have 150,000 cash and I'm at 615. Does that kind of change it, or does it not really change it?
I would say the answer is typically it depends. Sometimes you can do manual underwrites and things like that and make exceptions. And having a lower loan to value, meaning more money to put down versus the amount of borrowing does.
Right.
Yeah, it could help in that scenario.
And you have 3 credit scores, correct? Do y'all use the median one? Is that generally how it goes? You have TransUnion, Equifax, and what's the third one? Experian.
So on the mortgage side, typically what you're going to see, and it's pretty standard across the industry, is the middle of the 3. So yes, we'll do a tri-merge credit pull. The middle score of the 3 is what's usually taken for qualification purposes on the mortgage. Now, if you have 2 borrowers, a co-borrower and a borrower, you take the lower middle score of the two borrowers for qualification purposes.
Okay. Very good question. Okay. Lil ladder. Is that what that says, Paul? You're writing sometimes. Is that Lil ladder?
Little ladder.
Lil ladder.
Sometimes I write in all capitally for letters, and so I start out with my L's, and then I sometimes just make the L line, and then
It looks like
It looks like ill ladder.
it,
Is it Lil, like short for little?
little ladder.
At Lil ladder.
Lil ladder.
All right, at Lil ladder says any options with zero down.
Great question, Lil ladder. So yes, there are some options for zero down. You have the USDA, which is a government-backed product. It's 0% down. There are some qualifications, though. There are income limits, meaning you can't make too much money or you will not qualify for that loan. And then the loan has to be, USDA loan has to be, your home has to be in an area that's qualified for USDA. So usually in more rural areas.
Okay. So,
And also VA. So all those of you that are veterans or your spouse is a veteran, there is, the VA loan's a very fantastic loan, and it is 0% down.
fantastic. Okay.
Can I ask the next one, Jake?
Yeah, Paul, go for it.
This is from.
You told me to ask the questions, but
No, I said we can split them up, so
Yeah,
it's
we
not just
can.
me talking.
nice. I like it.
Cat Scratch Heaver has a question. Can you use equity in land as a down payment?
Yeah.
Yeah, great question. So in the case where you're building or maybe moving a manufactured home onto a property, yes, you can use the equity of your land to better your position in your bond to value, aka also as your down payment.
So if you own a piece of land outright, say you got a 5-acre piece of property and you own it outright, you can actually use that as collateral for your down payment as opposed to having coming up.
And are you talking about if you're building?
Yeah, if you're going to build a home or.
Yeah, if you're building a home, absolutely. I mean, that's a fantastic way to do it. It keeps your cash in your pocket. In a lot of cases, you use the equity that you've already built up in your land as your equity position or down payment for your build.
So
That's a great question, and yes.
So like a multi-generational property, if your parents have an excess of land, for instance, and they gift you a portion of that, you can use that for down payment.
Absolutely. Absolutely. Yep.
Yeah.
It's a fantastic way to come to the table to build your home. Yep.
Nice, Jake. I'm gonna hand this to you.
Oh, thank you.
We're here.
Redhead 0712 or at 712.
0712.
Redhead 0712 asks, best way to improve credit score?
Great question. So it kind of, I hate to say it depends, but it depends. In most cases, a very easy way to do this and to self-analyze and self-look at your credit situation and how you can increase your score is to take any revolving credit cards that you've got and make sure that you've got your balance paid down to 30% or less of your available credit limit. So if you have $1,000 credit available on a credit card, in this scenario, you'd want to make sure that your balance that you owe stays below $300. And if you consistently do that across your revolving credit cards, your scores will thank you for it.
Yeah, this actually recently happened to me. My credit just randomly dropped like 50 points, and I called Conor and said, what in the world could have happened? And then he said, well, have you bought something on your credit card? I said, yeah, we bought, I don't know what we bought. We bought something, a large purchase on a credit card so we get the points to go on a trip, and then we're going to pay it off, which we did. But just in that period of time, I had maxed out my credit card and it dropped my score 50 points. So
yeah, that's a great question. Another thing is you do want to make sure, a lot of people think maybe they just want to pay all their credit cards off, shut them down, and go debt free. That's a great plan to live life. But if you want a credit score, if you're going to need a score to build a house or buy a house, it's better to have the credit cards and buy a tank of gas on them once a month and pay it down to $10. But do have open lines of credit or credit cards. That shows that you are worthy of credit. So if you have access to credit that you're not using and you have multiple cards, that's going to boost your score.
yeah, and also, I mean, if you're married and one spouse does most of the finances and has the job and this and that, and the other doesn't, we ran into this as well. Kristen, she went to apply for something and they said, you don't really have any credit because for the past 20 years, everything's been put in my name. And she has not been building anything. She doesn't have a credit card. She doesn't have car payments. She doesn't have anything to build the credit. So she actually didn't have, they said, you don't have the credit. So that being said, it's nice. We realized it's important for both of us to have, some revolving credits and things going on, at least so she can have a credit score if she needs to do something.
Now that's really good. And I would encourage you guys, if you want me to analyze or take a look at your situation and give you some advice, I'm happy to do that. The other thing, on some extreme cases, I've got a team that I've worked with for a dozen plus years that do a fantastic job at actual credit cleanup. And so if you've been through a hard time in the past and you're struggling with credit problems, but you still want to be able to have a roadmap on how do I get to where I can buy a home or build a home or have my dream home, there's help and there's hope for you. Reach out. I'll definitely help direct you and guide you on that.
Yeah, we've had several clients do that actually. They didn't quite approve with their credit score or whatever the case may be, and Conor was able to, within 3 to 6 months, able to get them to where the credit was approved, and we were able to build their house, which was really cool to see.
Yeah, it's fun.
You want to do this next one?
I feel a little bit left out.
Oh yeah, come on, here you go, Conor.
You can ask
I think we're right here. You can ask yourself a question.
So this is from Wood Cabin, Texas. I wish I had a wood cabin.
That'd be nice. In Texas too.
Can you lump the land and house into one loan? Is it cheaper that way? So this is a two-part beauty.
Mm-hmm.
Can you lump the land and house into one loan? Yes, Wood Cabin. In most cases, the answer is going to be yes. Is it cheaper that way? But this actually is cheaper that why.
Well, yeah, that does say why, and there is no is.
Yeah.
Does that mean way? You think?
Well,
Or maybe that's a
Maybe saying it is cheaper that way, and why?
no, this is a form of shorthand. It's whenever intelligent people don't have to write. If you
You
don't
be the judge. Is that an A or an H?
Cheaper that way, why? Question mark?
I was hoping we had enough intelligence to understand that it would say way.
Okay, so I'm gonna say I'm gonna think
Why would I say
maybe
cheaper that why?
maybe you didn't connect that.
I didn't
correctly.
connect it. No.
Yeah, so cheaper that way. Wood cabin, I guess it depends. So.
A lot of Japan.
Yeah,
there's a lot of variables.
But as far as the main question, can you lump the land and house into one loan? Yes, and typically it's going to be preferable for you to do that. When you are building a home, and if you are borrowing money to build a home on land that you own or that you owe money on, in most cases, the bank's not going to loan you land for a house that they don't also encumber the land on. So it works together. And so,
Collateral.
yeah, not only can you lump the land and house into one loan, in most cases, you're going to have to lump the house and the land into one.
Because the bank's got to have something to take. If you don't pay your payment, they got to come in and have something as collateral. So therefore, they can't just take the house if they don't have the land as well.
Yeah, the one exception I would say is, can you lump the land and house into one loan? Would be if you own land and you wanted to buy, say, a manufactured home. You can keep those two separate. You can pay for the land separate and have the home and land in two separate loans in that case. But if it's real property, meaning a stick-built home,
Because in that case, they can just come wheel the house away.
Right? Yeah, in that scenario, the home is considered personal property. Think of it like an RV loan or something like that.
I have some personal questions for you.
Are we done with Instagram questions?
Yeah, those are the Instagram questions that came in.
Cool.
But just with your knowledge of the market and your experience the last 20 plus years, like where do you see the next 6 months to a year? If you had to just guess, what does it look like?
I am hopeful and optimistic that we are going to see a nice resurgence. There is talk that the Fed's probably going to lower rates as early as this week. Inflation seems to be more under control, and if we stay down that path, then I'm very optimistic and hopeful that we see rates back down into the 5s in 2025.
That'd be great. It'd be a big shift. Where did we hit? I mean, height-wise for prime.
I'm not sure on prime. I don't follow that as much. But as far as on mortgage rates, we were in the high 6s to mid 7s in a lot of cases even, and that's come down a little bit. But
you don't realize how much that affects your payment until you start looking into it. It's staggering.
It's drastic. Yeah. Well, the problem is we all got used to 2.5-3% interest rates. So historically speaking, our rates right now are not that bad. But when you're used to 2.5 and 3% interest rates and you're living your life and you're borrowing money and you're buying houses on that, and then all of a sudden over a short period of time, interest rates double and more, it's very much sticker shock, and it makes you realize how much money we have going up towards interest rate payments on the mortgages.
Yeah, I mean, I've heard it so many times from like the baby boomers. They're like, "Wow, this is great rates." I remember when rates were 12-15% to get a house, and so I mean, if you compare that, it's
yeah. And I also when I talk to them about that, but also your house is worth $45,000.
Yes, yeah, that's true.
Yeah, so I were 18% on $45,000. That's a lot, and it's drastic, but it's not the same as $500,000-$700,000 mortgage. It's true, and that makes a difference. So.
Another thing, for pre-approval, people can come to you, get pre-approved for a number. How long does that process usually take?
Yeah, so pre-approval, in what scenario would you need pre-approvals?
So if someone wanted one of our portfolio owners of a lot of land, and I would send them to you to get them pre-approval to say, can they be approved for $900,000 or $700,000?
Yeah. So in most cases, if they have access to their documents, meaning their W-2s, pay stubs, or tax returns, depending on how they're self-employed, we can turn that in 30 minutes to an hour, very quick.
That's a great thing to have too. I mean, if you're thinking about shopping for a home, to go ahead and get a hold of Conor and get a pre-approval, so at least you know what range. Because a lot of times what happens, people are like, oh, I want to buy a house, and they start looking, and just like going to buy a grill or a car or anything. You're like, ooh, that's shiny, I want that. But if you have an idea of where you land in approval, then that gives you a ceiling, an idea of what you need to be looking for.
Yeah, that's a good point, Jake. And I would even go a step further. In just because I can approve you for a certain amount and a certain payment, that doesn't necessarily mean that fits in the budget that you are comfortable with. So we can dive in, and not only this is what you can be approved for, what are you comfortable with budget-wise, and then we can back into that range as well, so that you get a full picture. And it is nice to have that knowledge when you're out shopping or looking for one's built.
Well, Conor, thank you for your time today.
Man,
very helpful.
Conor, see you guys around.
What did you think about it?
I thought it was pretty good. I maybe we should get somebody with better penmanship to push. That was great.
I like it.
All right. Thank you all for watching the 7th podcast this year. We'll see you soon.
Nice, Paul. Good job.
Thanks.